This video is about SEP IRAs, easily the most popular tax strategy that we have in Tax Planner Pro, maybe tied a little bit with 401ks, but SEP IRAs, as I'm going to discuss, are a bit easier to set up, a bit easier to manage, and usually have the same kind of contribution, or close to the same kind of contribution advantages that a 401k has. The SEP IRA planner that you're looking at is designed to go through several scenarios so that you can see what your tax savings is going to be given different contribution amounts to a SEP IRA. This is a retirement account, it's an IRA, and so it's not necessarily that you're losing any money. You are simply transferring money from your business to a IRA, which you can invest the way that you want to, and you get a tax deduction for it. So let's jump into it. So first things first, a SEP IRA allows you to put up to $58,000 per person into this IRA and to take a tax deduction for it. So that's $58,000 if you maxed it out, coming right off the top. And that's the 2021 limit, coming right off the top of your taxable income. Helps you save for retirement. They are extremely easy to set up, and like I said, I always like tax deductions where you don't have to actually lose the money. You don't have to spend it. In business expenses or something like that, you have to spend the money and give it to someone else to take the tax deduction for it. This is something where you actually still get to keep the money. You're just kind of transferring it from one account to another. And of course, an IRA, you can't access it without a penalty, meaning you can't pull money out of it once you put it in without a penalty. But still, this is about as good as tax planning gets. So something to definitely take advantage of if you can. So let's define what a SEP IRA is. It is an individual retirement account. It is only available to self-employed businesses and their employees. Self-employed is a sole proprietorship, partnership, S corporation. You have to own your own business to use a SEP IRA. It does not mean you can't use a traditional IRA or a Roth IRA too. Those are still available to you, but this is a much more powerful vehicle because of the amount of money that you can put into it pre-tax. The company is who contributes money to the IRA. So you personally are not putting money into it. The company is putting the money into it and taking the tax deduction for it. That tax deduction flows down to you then from the business, and you must contribute to employees too. So if you have 8 other employees, they all have to have a SEP IRA as well. So that is something to think about. If you're the only employee or the only person working at your business, a SEP IRA is really great and simple. If you have 9 employees, I probably would move more towards the 401k because it's a bit more flexible in that regard. But most folks who use Tax Planner Pro maybe only have 1 or 2 employees, and in that case, I still think the SEP IRA is better because they're very low cost compared to the 401k. As you're looking at the planner, this is an example that I threw together, but as you're looking at the planner, you can see it shows you your taxable income. It shows you if you're an S corporation, what your current S Corp SEP income is, what your non-S Corp SEP income is. And what that means is if you're an S corporation, your SEP income are your wages that the S corporation pays you. It's not your full profit from the business. Whereas if you're a partnership or a sole proprietorship, it is your full profit. So based on what kind of business you are, the SEP IRA planner is going to customize this information for you. And then the 3 boxes below show you different maximums based on the current SEP income that you have, different amounts of contribution and what you would save with those contributions. The system also shows you if you're not able to contribute to the maximum, it will, if you're an S corporation, give you additional contribution amounts. So this screen is showing what that looks like. Now, if you're a sole proprietorship or a partnership, this screen will be a little simpler because your calculations are a bit simpler. And it's, like I said, it's a very easy thing to set up and figure out. But if you're an S Corp, we have to give a few different options, mostly because we're trying to show you what you could contribute if you maxed out your SEP income versus what you can contribute based on the SEP income that you have right now, i.e. your wages. So what we're trying to say is If you wanted to contribute more to your SEP and you're an S corporation, you would need to increase your wages if they're not above the maximum threshold already that they need to be at to get the 57 or 58,000. 57 is what the 2020 contribution limit was, and then 58,000 is what the 2021 contribution limit is. Implementing a SEP IRA is very easy. You set these up at a brokerage of your choice. You can set them up at Scottrade, at E-Trade. We also have an arm of our operation that is a registered investment advisor. So if you would like to use us and have us help you set that up, we can. They have to be set up for each owner and employee. The business makes contributions. It is very simple once you have it set up, but it really is about setting up an account and then having your business send contributions that are at or below what the maximum contribution you can make is using the Tax Planner Pro planner that it's showing you. And then you take a deduction for the contribution like it's an expense. So when the business sends money over to the SEP IRA, that is an expense that shows up right on the profit and loss, and you get to take the deduction for it. So it's pretty simple. And the nice thing about SEP IRAs is they're very inexpensive. They're not something that's going to cost you $100 or $200 a month like some 401ks do. And on the rankings for a SEP IRA, very large benefit because again, you're not losing the money. You're just transferring it over to your own IRA, or you're not going to really get audited much. So it has a very low risk. These are not transactions that the IRS jumps all over. Make sure you realize the implementation deadline. You actually have until the extended deadline of your personal tax return to do the contributions, but I like to say keep it to April 15th. So you have to make sure that you are making these contributions by April 15th, unless you extend your tax return. Then you have whenever you file the tax return, you have until you file the tax return to get contributions in. So that's kind of nice because you can see what your tax bill is the following spring and then decide if you want to contribute to a SEP IRA or not. So that's kind of unique and one of the only tax planning strategies where you can do something the following year and still get benefit for it in the current year. And if you need more information, the forum's always available to you. You can use our chat button, and we've also got some links on the planner page to go to and research a little bit about that. Thanks for taking a look at the SEP IRA, and we'll see you in the next video.